Good morning. I'm Pete Najarian. This is The Take on this Thursday morning. And yesterday, another bumpy ride. Interesting to watch. The acceleration from noon to the close in the Dow. That was something pretty spectacular to watch as well. 225 points. That's how much we gained yesterday on the Dow. Then you look over at the NASDAQ. It recovered off of the lows. It had been in the red. It was very choppy. And then it moves up and finishes the day up about 71 points. So positive and positive a little bit. Maybe they're working together again. That, the dislocations that we have had in the past, a little bit less of that and a little bit more we've seen, especially when you look back to January and obviously the kickoff of February, a little bit more in concert of late. So pretty interesting. You've got crude oil still trading right around those areas, call it a little over 87. I look over at the 10-year yesterday, it was about 176. So yesterday, a very, very interesting day. Yes, bumpy, but there was a lot going on and about 39 million contracts trading yesterday on the option side. So very, very close to that 40 million mark. Continues to be very, very active each and every day. Communication services. Now you look at all these various sectors, but really, we're talking about Google, right? Google had a great day. They had earnings that were powerful, but I think, again, I'll still say it, I think that split was very, very big as well. And a lot of people have all their theories behind why are they splitting and this, that, and the other. Should they go in the down, all this stuff. We don't know the answers to that, but we do know they announced a 20-to-1 split. So with that, a very, very powerful catalyst on top of what that was a very nice earnings report coming from Google. That was up significantly yesterday, up about 7.5%. That whole space as a sector up about 3%. So very impressive. Healthcare had a pretty decent day. We haven't talked about that nearly as much of late. It hasn't been one of the major players, but healthcare had a pretty decent day yesterday, up about 1.25%. You had financials, technology, industrials, all up about, call it close to about 0.75%. Semiconductors, that's what really stood out. Semiconductors yesterday had a great day, up about 2.5%. As a matter of fact, when you look at some of the movers yesterday, you do look right at SMH, and you'll see a nice move to the upside. On top of that, AMD, you got Xilinx, you got Micron, all of those names moving to the upside. Yes, they throw in Qualcomm going into the earnings, a little bit different today, but going in up about 6.5%. I mentioned Google up about 7.5%. We also had travelers yesterday in terms of the Dow. That was the leader of the Dow yesterday. That was up about 3%, but not everything was great yesterday, even though we did finish in positive territory. We all know the story behind. We talked about it yesterday. PayPal, talked about it on the halftime report. PayPal, and you heard Mr. Wonderful say, well, it sucks. You know what? It was very, very disappointing. We talked about that yesterday. Down about 24%. The misses, the guidance, all of it, very, very disappointing. And decisions are going to have to be made, or have been made by many already. And we've been watching that play out as well. Netflix had a little bit of a pullback again. Netflix had that great run, as we were all talking about, and bounced after that sell-off into earnings, then in after earnings, and created some opportunities out there. And now we've seen a little bit of a pullback after a lot of those buyers did come in, including myself, but a lot of the buyers who did come in post earnings. Now we're seeing a little bit of a pullback after that big pop that it had with a lot of the announcements, specifically Bill Ackman and so forth. Twitter, that was down yesterday. Lucid, that was down pretty hard yesterday, down about 7%. It seems like we've been saying that a lot lately when we've been talking about that particular EV company with Lucid. Zoom down about 5% yesterday. Salesforce down about 3% yesterday. So not everything was great. Now you flip it over to today. Boy, those markets didn't look very pretty today. And why? Well, it really comes down to Facebook for sure, kicking that off last night with those earnings and the lack thereof of the earnings. And a lot of people disappointed, obviously. That's something that Facebook has rarely done, but they certainly did it this time, and they did it in a big way. And the costs that they've got and the focus on Meta, all of that, turning that FB, if you want to call it Meta, you can. You want to call it Facebook, they still can. Obviously, with FB still as the symbol there. But we look in the pre-market, the Dow itself was actually hanging in there okay. It was really NASDAQ related. We were looking at down about 2%, down 330 points in the pre. Last I looked, we were down a little over 200 points on the NASDAQ, but we also saw the Dow start to float in that direction as well, from down 60 early on, down, call it somewhere between 240 and 260 on the Dow as well. Crude, right where it's been, call it 87.5, but somewhere between 87, give it 88. The 10-year did have a little bit of a bump to the upside. It was trading about 182 earlier this morning. I'll tell you, when you look at what's going on within the NASDAQ, though, you can just point to Facebook, all of a sudden the read-through, Twitter, Snap, then all of a sudden you start to have all the controversial things that are going on right now with Spotify. But I do want to correct everybody. Now, take a look at that chart for that company. Before the Joe Rogan issues that have been going on, that stock was already in a bit of a tailspin. So a lot of people are trying to frame this around this whole controversy that's going on there. Take a look at the stock and see when it really started selling. That will tell you a heck of a lot more. But slowing premium subscriber growth, that could be something that everybody will certainly latch onto as well. There's a lot of different things, but this is something that has been happening for a while now, like a lot of the other names that, that we talk about each and every day, specifically names with higher or no PEs and all the rest of it. There certainly has been a selling pressure, and every once in a while we get a little relief, but then they come right back to that same thing. Fundamentals, they do eventually matter. Volatility index, call it between 22.5 and 24. Last I looked, it had eased back to that lower end at that 22.5 area. So communication services, down about 5% early, down about 4%. That really triggering. You take a look at Facebook, down, call it 25% or somewhere near that area. Twitter, down about 6%. Amazon, down about 5%. Whew, you start to get a little bit tired. Then you get away from that area, and there's still other names that are definitely under pressure as well. Honeywell, down about 6%. Not very happy with what's going on there. Biogen down about 5%. Consumer discretion had improved. It certainly has improved from where it was. It was down 2+%, down about 1.5%, maybe a little bit more than that percentage-wise. Technology improved early on. It was down about 1.5%, started to get a little bit better, down about 1%. But we still are seeing a lot of various names that are in positive territory as well. I'll tell you what, T-Mobile being one of them. That name up about 10%. You look at Ralph Lauren, still one of those names that stands out, up more than 6% today. Humana was up pretty strong. Penn National up pretty strong. So it's not all bad. Just like yesterday, it's not all good. So, we go back and forth with this whole thing. Very, very interesting. Every single sector early on was in the red. Now, obviously, things changed dramatically. We're a little bit more than an hour into the trading day, and I'm sure we're going to have a lot more news, a lot more trade, a lot more of everything. But just keep an eye on fundamentals, keep an eye on what it is, and maybe lists that you have out there. That's what we are always doing. That's what people talk about all the time is on sell-off days, okay, well, what are you looking for? You should be doing the same thing on these big rising days is there anything that needs to be addressed? And that's what we're looking for, the addressable markets, and is there any opportunity markets as well? Always what we're doing each and every day, part of the discipline. So, going to give you two unusuals, then we're done for the day. United Airlines. Now, we've talked about jets on multiple occasions. We've talked about that particular ETF. We see it hit fairly frequently. Here we are with United Airlines trading, call it right around 44. It was trading somewhere in the 43s up into the 44s. Last I looked, very close to 44. 4,200 of Friday, tomorrow, February 4th, 4,200 of the 43 calls, which are a little bit in the money at this point in time, or they were. So keep an eye on that. We're seeing that option paper along with what we had seen in previous sessions with jets. Kind of makes you wonder what's going on in that particular marketplace. But United Airlines certainly stands out today, this morning, with an unusual. I got an unusual. I just more of a commentary than it is about anything that I'm not doing anything about the action of this one. But XLE. Talk about energy all the time. Talk about oil. Talk about crude, 87, 88. We also talk about the idea that I think that oil will be in that triple digits. I thought that for a very long time. I still think that. That being said, looks to me like some hedging going on here in the XLE, the energy ETF. Basically, we're talking about ExxonMobil, Chevron taking up a huge majority of that. And then, of course, there's been multiple other names. But that's the big players that within that ETF. Always know the weighting and what are the names in specific ETFs that will very much help you out into the future. So XLE, it was trading a little over 67.50, call it 67.75, somewhere in that range. 7,500 of the March 59 puts being bought. Now, why are they buying them? Are they buying them because they're negative? Possibly. We don't know the answer to that. Or is there a hedge there? Is there some sort of a hedge where somebody's like, look, we've had this big run. Maybe we get some kind of a pullback, a little head fake maybe, or whatever. Maybe it's real and we get a pullback. But under that circumstance, we'd like to have some puts along board. We call them insurance. That's what this feels like. It feels like, I'm just saying feels like, that's part of the emotion sometimes that comes into markets, but that's what it looks like to me. If this was an aggressive player playing a lot closer to where the stock is trading right now, I'd say, yeah, that's somebody who's thinking this thing looks like it's on a major pullback. We don't know the answers to this, but that's just the read-through that I've got. We are at levels now on the XLE that we hadn't seen since going all the way back to March 2019, as far as the level at 67s. So keep an eye on that as well. So could we have a pullback? Absolutely. We have pullback in any of these names. I mean, nothing these days will surprise any of us, I'm sure, especially after the January we've had and the volatility that we've had and the bouncing around, more so than I think I can recall in quite a long time, although we had some pretty big runs within the pandemic. Interesting day, interesting start. We'll see how this plays out. Earnings continue to roll on. Have a great day of trading. See you tomorrow.